Greetings, members one and all of the Salivation Nation, with some updates on gold and sort of contradicting a little bit, considering we had some great economic data come out from the United States here, but gold has scaled up a bit to a 2-week peak as the dollar dips after US GDP data. So let's explore this a little bit and see what's going on. This comes to us from Reuters, and it's gold scales near the 2-week peak as the dollar dips after U.S. GDP data, the gross domestic product data. And this, we'll take a look and see what this article says and do a little analysis of our own, what I think kind of what's going on here. Gold jumped to a near 2-week high on Friday en route to its best week in 12. As the dollar slipped on tepid inflation data from the United States, which outweighed an overall strong first quarter growth report. Spot gold gained 0.8% to $1,287.62 per ounce after hitting its highest since April 16th at $1,288. The metal, which reached its lowest since late December on Tuesday at $1,265.90, is up 1% so far this week and set to post its best weekly gain since February the 1st. U.S. gold futures rose $9.10 higher at $1,288.80. The main reason is the fact that dollar is pulling lower today. It's a bit of a head-scratcher that the dollar is so low on a great GDP number in the U.S., says Bob Habercorn, senior market strategist at RJO Futures. However, we have to be cautious about this move. It looks like false positive because I expect equities to continue to be strong next week, pressuring the precious metals. The dollar index fell, making gold cheaper for holders of other currencies after an overall strong U.S. first quarter growth report was overshadowed by soft inflation data. The core personal expenditures consumption price index figure, the Federal Reserve's preferred inflation gauge, increased at only 1.3% rate versus a 1.8% in the prior quarter, so inflation is slowing a bit. Also, there seems to be a short of coverings as we are heading into the weekend in some technical buying, said Jim Wyckoff, senior market analyst with Kitco Metals. Even strong data out of the United States was unlikely to change the Federal Reserve's monetary strategy, analysts said. According to a Reuters poll, major central banks are done tightening policy as the global growth outlook has softened across developed and emerging economies, with scant prospects for a surge in inflation. Despite a significant drop in long-term real rates, gold prices have remained at year-to-date as recession fears have receded since late last year, Goldman Sachs said in a note. Central bank gold purchases have been running strong this year, which could support prices, the bank said. While gold has fallen more than 4% from a peak in February, bullion's recovery from this week's 4-month low is painting a neutral picture in technical charts. Gold looks neutral in a 1,274 to 1,284 range, and an escape could suggest a direction, said Reuters technical analyst Wang Tao. Among other precious metals, silver was up 0.8% to $15.06 per ounce, while platinum rose 1.8% to $898.05. Palladium advanced 3% to $1,457.06 per ounce, its highest level since March the 27th. You know, this kind of information and what's going on, there's so many different aspects and fingers that can kind of weigh in on the sentiment for the price. And each of those different measures has a slightly different importance. And I think people are kind of skeptical as to where the markets could be. Yes, the over 3% GDP number, which was great news, you know, those numbers can be revised downwards or even upwards in some cases. But it is good news. I think the overall economy, I believe, is doing well and continuing to do well based off of the indicators and that we've seen growing for quite some time now. And I think the policies that Trump has implemented, and with Congress passing the tax cuts and less regulations, have certainly helped. But notwithstanding, there are signs that there could be some slowdowns that could occur in the future. As to whether or not it'll happen this year, most analysts believe that it won't, but we are overdue for a recession. And I believe that it may not be as severe even as the last one, considering some of these policies have taken into place. Because generally, you think about it, business and the free market enterprise system, capitalism, it's in everybody's best interest, really, that people do well, and so they will adapt and overcome typically, and that's kind of where things occur and how progress is made. If you give more people in businesses the chance to overcome even with their self-interest at heart, typically they will. Although, however, there is the real elephant in the room, and the real big problem is the faith and strength of the currency. And the currency that we hold is the dollar. It's the best of the worst out there. But as some people say, you know what? If everybody else becomes weaker, that doesn't necessarily mean that you become stronger. You're just the strongest of the weakest out there, and we are holding a lot of debt, and it's growing every day with deficit spending and the like, and we need to get our rein in spending and government spending. And I believe if we were to do that, if we really were to do that, that would strengthen and stabilize the dollar. And I believe that's kind of what we need. We see these numbers about inflation, increase at only 1.3% versus 1.8% in the prior quarter. That's good news, but it also could mean potentially bad news. All these things and all these measures can be analyzed and could signal bad or good news. There's some people that feel like before the next economic downturn, there'll be, especially if it's a big one, a potential deflation as opposed to inflation that could be coming. Regardless, we'll see how this plays out. I was excited to hear about the GDP numbers coming through, over I think it was 3.2%, which was great news. But when you think about it in terms of, what will it be? How will it measure out in the coming quarters? Will it be revised downwards? Could it be revised upwards? Who knows? Growth has been steady, but it's not been as strong as some people would have liked to have been. Maybe that's not necessarily a bad thing, and into a stable economy, because really that's kind of what we need. But we are overdue for another recession in one form or another. The economic crisis of 2007, 2008 could have been a lot worse. It was very scary what happened there. And there's different philosophies as to what kept us from literally going into a strong depression. Those kind of things, or what's going to happen in the future, who knows? And this is why you and I accumulate gold and silver, is to protect ourselves in the cases of an economic downturn that is as bad or worse than the Great Recession. And it may take a while. When we had the recession of 2007 and 2008, well, gold and silver didn't immediately just pop up then. It took a while. And that could be the same. It could happen the same way this time, especially if you have a massive deflationary period before a massive inflationary or hyperinflation. And so those are the kind of things that we protect ourselves against with the precious metals. And we hold them because we know that they're a form of savings, they're a form of insurance for times of economic hardship. So hold fast and hold true to what we do here in this community, and that is to accumulate and hold precious metals for the long term. That's what they're there for. But it also is interesting to pay attention to what's happening in the markets and to see where things go, because really in the end, we all want to do well. And we want to see people succeed. So we really don't have to be in a situation where we have to use gold and silver as currency again, or as money, because if we have to do that, times are going to be pretty rough, and there's going to be other things we need to worry about as well. So post your thoughts below. I'd like to extend a multitude of gratitude y'all for watching and encourage you to please rate, share, comment, and subscribe.